Good morning. Welcome to AMRO's press briefing on the quarterly update of the ASEAN+3 Regional Economic Outlook Rio. I'm Daisy Wong with AMRO's communications team. Let me first introduce our speakers today. In the middle is AMRO Chief Economist, Dr. Dong He, and sitting next to him is Mr. Alan Ng. He leads AMRO's regional surveillance group, and he is in charge of the Rio. We'll start today's press briefing with some brief remarks by Dr. He and a short presentation by Alan, and then we will take your questions. Before we move on, let me quickly remind you on the embargo. As we speak, the embargo on the Rio report has just finished at 10:30 Singapore time. And without further ado, I now invite Dr. He to say a few words on the latest regional outlook.
Thank you, Daisy. Good morning. Welcome to this update to our regional economic outlook. The ASEAN+3 region continues to show remarkable resilience, supported by strong technology demand and robust foreign direct investment, particularly in advanced electronics, electric vehicles, and the digital services. These trends are helping cushion growth even as tariff pressures persist. Since our October update, we have made an upward revision to our forecasts by 0.2 percentage point for both 2025 and 2026. We estimate that the region grew by 4.3% in 2025 and project the region's growth to moderate to 4% in 2026. Inflation remains low and stable, rising from 0.9% in 2025 to 1.2% in 2026, still below the region's long-run average. Risks around this outlook, this baseline outlook, are becoming more balanced, though uncertainty remains elevated. Geopolitical tensions since the start of the year remind us that we now operate in a world where shocks can emerge quickly and unpredictably. Looking ahead, policy readiness will be essential for navigating near-term risks. Over the longer term, diversifying growth drivers and the deepening regional economic integration will be key to further enhancing the region's resilience. With that, let me pass the floor to Alan.
Thank you. Good morning, everyone. Good morning, everyone. So let me begin with the three key highlights that was already summarized by Chief Economist here. The first is that ASEAN+3 growth has exceeded expectation, and this was really due to resilient technology exports, strong investment, especially in ASEAN, as well as a less severe tariff outcomes than initially anticipated. And with that, the second takeaway is that we have revised our growth outlook upward. Third, the balance of risk has improved compared to our previous assessment, but uncertainty remains highly elevated. Now, let me walk you through the details behind these three key takeaways. Now, starting with growth performance, growth in ASEAN+3 is higher than initially anticipated. Now, the chart on the left shows how domestic demand continued to anchor regional growth throughout last year, with solid export performance actually providing the additional lift. Private consumption remained resilient, underpinned by favorable labor market conditions and low inflation. But more importantly, private investment was strong, especially in ASEAN economies, and this has been supported by robust FDI commitment. This is a point that I will come back to later. And looking at the chart on the right, growth for most regional economies have outperformed our earlier post-Liberation Day forecast, as well as generally the consensus expectations from most forecasters. And this is a notable outcome given the elevated uncertainty in the global environment. So what drove this better than expected performance? Four key factors. First, actual tariff outcomes were less severe than initially anticipated. Now, the chart on the left shows the gap between the announced effective rate following the Liberation Day, which was close to almost 40% for the region. And the realized rate for the most of the year was actually less than 20%. And this gap really reflects, among other things, exemptions for specific sectors, products, as well as trade agreement reached with many regional economies last year. The second equally important factor underpinning the better than expected performance is actually technology exports, which have remained remarkably resilient. So the chart on the right shows that tech exports, driven by AI-led global demand, have continued to support export growth across economies in the region. Now, semiconductor exports in particular continued to expand robustly, growing at above 20% year on year in the latest data that we have in October. And this reflects the continued strong demand for AI-related applications and cloud infrastructure. Third, we saw a significant increase in investment activities, especially in ASEAN economies. And the table on the left, we tabulated the impressive FDI commitments across ASEAN. And the main sectors attracting investment are in the areas of advanced electronics, especially those related to AI, data centers, and electric vehicles. Now, this trend is particularly important because initially the anticipation was that companies would wait and see and possibly reduce capex given the highly uncertain environment, but this had not happened. And this is not just FDI commitments. We have seen high growth in capital imports in many ASEAN economies, as well as actual data on private investments. So the FDI commitments are translating to actual investment activities. Fourth, last but not least, regional authorities have also deployed accommodative macroeconomic policies to cushion growth headwinds, and this has helped to sustain domestic demand. Turning to inflation, headline inflation in the region remained broadly in line with expectations. Overall, inflation remained low and stable below 2% across most of our regional economies. This brings us to the revised growth forecast by us. As shown in this table, ASEAN+3 growth is estimated to be at 4.3% in 2025 and projected to be at 4% this year. Now, both figures represent upward revisions of 0.2 percentage point from our October forecast. The moderation in 2026 reflects an expectation of slightly weaker external demand this year. Now, the upward revision is broad-based across most economies in the region, as you can see in the table. The green represents upward revision. Just to point out some individual economies that have seen that we have revised upward quite a bit. Vietnam, which saw the largest upward revision to 7.6% this year. And there's also Singapore, where we have revised upward to 3% this year. For China, growth was 5% in 2025, matching its 2024 performance. And we project for China to grow by 4.6% this year. For inflation, regional headline inflation is estimated at 0.9% in 2025. And is projected to edge up slightly to 1.2% in 2026. Now, this low and stable inflation forecast really reflects the expectation of a subdued global energy and food prices environment alongside stable domestic demand conditions in our regional economies. Finally, on the risks to the outlook, the overall balance of risks, as we have said earlier, has improved compared to our previous assessment, but uncertainty remains highly elevated as events in the past few weeks and the past few days have vividly demonstrated. And we have also added a new risk to the map, which is a sharp fall in technology demand. Now, overall, on the downside, the key risks include continued US trade and macro policy uncertainty, a possible correction in AI-driven technology demand, and more volatile global financial markets. So the technology risk is particularly important at this juncture, given the sector's extensive linkages across regional economies and how it has been supporting growth in the region and how we expect it to continue to support growth in the region. And a sharper than expected slowdown, say from equity market corrections, delay in downstream AI deployment, or capacity overhang, could weigh on regional exports. But on the flip side, we also see upside risk, which includes perhaps stronger than anticipated global semiconductor demand to continue, and the translation of FDI-driven investment into more durable, higher potential growth in ASEAN economies. To conclude, let me recap the 3 key takeaways from today's update. First, ASEAN+3 growth has exceeded expectation in 2025, supported by resilient technology demand, strong investment in ASEAN, and less severe tariff outcomes than initially anticipated. Second, we have revised up our forecast. Growth is expected to be 4% this year, and inflation is expected to be low and stable. Third, while the balance of risk has improved, uncertainty remains elevated. And in the near term, as Chief Economist has highlighted, maintaining policy readiness to respond to emerging shocks is critical, and over the longer term, diversifying growth drivers and deepening regional economic integration will be essential to strengthen the region's resilience. Let me stop here. Thank you.
Thank you. Thank you, Dr. He and Ellen. And we have received a number of questions from you in advance, so let me start with them. But please feel free to continue to send us questions in WebEx. First question, there's a question from Nikkei Asia Bureau in KL. It's on the broader regional outlook. Aside from Trump's tariff, what are the headwinds for ASEAN? And are there country-specific headwinds that may or may not apply to the entire region?
Thank you, Daisy. Let me start by answering this question. I think as we articulated earlier, that the strong growth or better than expected growth outcome has been driven in large part by very strong exports related to semiconductors and AI, the AI boom that's going on globally. And of course, very strong FDI investment that's been translated into private investment in this region. This is very positive. But when you have such strong growth, and then you have to ask the question, what happens if this growth, that part of the growth actually take a hit? So what could happen to that part of the growth? At the moment, as you know, that there has been discussion or debate whether equity markets have become overvalued, particularly for stocks relating to AI-related stocks, and whether there is a froth in financial market. That debate continues. So the risk here, suppose there is some froth and there is a significant market correction. That's one thing. Then, of course, that might lead to less optimism in the potential of AI in the future, and then investments and exports relating to this sector might have a sharper than expected slowdown. And since growth in the region has been driven to a large extent by this optimism, if that sentiment changes, then that could affect the region's growth. So that's one important risk we have highlighted here in the sharp fall in tech demand. That would have high impact. But at the moment, we feel the probability is still quite low. And this is probably likely to be a process that's going to last longer than what we have seen. Maybe it's quite possible this boom will last for another couple of years, right? So we believe a sharp correction at this stage still has pretty low likelihood. Although if it happens, the impact could be quite high. So that's the first headwind or risk I would like to highlight. The second one is really elevated global financial markets volatility that could happen. As I mentioned earlier, since the start of the year, we are only barely 3 weeks into the year. You can see that many things have already happened, particularly relating to geopolitical tensions centering on the US. And these events, they don't necessarily cause markets to react sharply, but there is such a potential. And if financial markets do react, and the likelihood, for example, yesterday's reactions from the markets to geopolitical tensions can be quite large. and the financial markets in the region are quite closely aligned or tied with global financial markets. So if we have major realignment in asset prices, particularly, for example, in exchange rates associated, caused by geopolitical tensions, this could cause large changes in the region's financial conditions, and that would, of course, affect availability of credit. That would affect investor sentiment. That would affect capital flows. So that would be another important risk to watch. But at the moment, we feel, given the region's policy room, central banks and the Ministry of Finance, they have significant policy room to deal with such shocks. So as you can see from this risk map, that we put more volatile global financial markets in the center. That is really the impact would likely be medium-sized, and the likelihood we put it also at the medium level. So these are the several, I think, important headwinds I would like to highlight, in addition to, of course, continued uncertainties in terms of U.S. trade policies. Let me stop there. Thank you.
Thank you, Dr. Another question from central banking. What are you hearing from regional partners and ASEAN+3 member economies about the Fed's independence, particularly after the U.S. Justice Department initiated legal action against the institution? Are there concerns about independence? What are the nature of these concerns, and how might an erosion of the Fed's independence affect ASEAN+3 member economies?
Thank you, Daisy. I think central bank independence is of paramount importance. It's a cornerstone of macroeconomic stability and financial stability. It has proven to be the foundation for long-term prosperity. Now, a key channel that perceived the erosion of central bank independence, for example, in the US, how would that affect our region? Of course, it's through the important role of the dollar and its implications for the international monetary system. The dollar is the premier international reserve currency. So if there's a perceived erosion in the Fed's independence, that would affect investor confidence in the longer-term stability of the dollar itself. Because monetary policy, of course, is a key determinant of how currencies performance in the short term and also longer term stability of the currency. So that's monetary policy is most important factor. It's one of the most important factors of the determinant. As I mentioned, a few months back when I did this interview with central banking, I pointed out the role of the dollar is really a total package. It's a reflection of the credibility of monetary policy framework of the issuer country of the Fed, and of course it underpins by the policy predictability and the strength of the institutions. And if that package is being weakened, then we will investors would start raising questions, and investors might gradually diversify away from US dollar assets. And I also mentioned earlier that the US dollar is a very important funding currency for the region. So if there's volatility in that role, that would also introduce financial stability concerns. So what we have heard from the membership is that there is, of course, this would further incentivize contingency planning, in the sense that even though we continue to believe that the dollar would and central bank independence would be preserved, and dollar would continue to be an important international reserve currency, I think member authorities would continue to think what are the contingencies they have to plan for if there are other shocks that might affect or the stability of the dollar. So let me stop that.
Thank you. Thank you. We have a couple more questions on the region, and then we will go into country-specific questions. One question from Di Caijing Yitai of China. Under the narrative of a weakening US dollar, how does AMRO assess the potential for increased capital inflows into ASEAN+3 markets? And what are the implications for regional financial stability in 2026? That's from Yitai.
Okay, so let me again take that question before passing maybe the floor to Alan for other questions. I think again, I mean, this is related to the earlier question. In normal times, I think if there are less issues about credibility of central bank independence or credibility of monetary policy frameworks in the US. In normal times, when the Fed eases monetary policy, then that tends to push capital into the region, into the Asia region. And when the Fed tightens, that tends to be there tended to be in the past capital outflows from the region, but these processes tend to work relatively smoothly, right? But that's how we observe. But we need to differentiate this type of normal reactions from market stress. If, for example, if there's dollar weakness under the condition, there's perceived erosion of central bank independence in the US, or under other stressful conditions, then it's not necessarily the markets can adjust very smoothly. So there may be volatility, unexpected volatility that would be different from the normal correlation patterns or movements in asset prices in the past. So in this kind of uncertain environment, I think the question is not only about dollar weakness per se; it's really about whether whether dollar weakness or perceived erosion of its safe haven status would lead to more volatile financial market conditions more broadly. So that's related to the earlier question. In that sense, then of course it's imperative for the authorities in the region to make sure that financial institutions have sufficient cushions to deal with volatilities in financial markets. As I mentioned earlier, the dollar is a very important funding currency. And of course, Asian investors also have very large exposures to dollar assets. So if there are movements, for example, unexpected movements in the US dollar treasury, in the US treasury yield curve, we have already seen some movements, for example, recently. Those would have large implications for the capital of financial institutions in this region. And consequently, that would, of course, affect availability of credit and financial conditions more broadly in this part of the world. So again, the point here is that it depends on, the implication depends on what's the source of perceived weakness in the dollar, and the worry is that could lead to broader financial market volatility, which could be quite detrimental to financial stability.
Thank you. One more follow-up question from Yitai just came in. Yitai want to ask, based on AMRO's assessment, what is the estimated likelihood of a slowdown in US domestic demand? And how might the resulting negative spillovers impact the overall growth trajectory of the ASEAN+3 region?
Okay, so let me take that one again. So the U.S. economy, of course, is still the largest economy globally, and it's an important source of demand for the region. So if the U.S. economy slows, that typically tends to also leads to a slower global economy. That would certainly affect the region, but the question I think is more about the likelihood of a significant slowdown. We think the likelihood is not that big at the moment, given in particular that financial conditions in the U.S. are still quite accommodative, and so that should support growth to be reasonably strong. Now there are undercurrents going on. There are many other developments that could affect confidence in the consumer and investor confidence in the U.S. economy. So there are important risks around that baseline of reasonably strong growth. But as a baseline sort of forecast, I think the main institutions are all pointing to continuation of reasonably strong growth in the U.S. at the moment.
Okay. Let's move on to country-specific questions. There are several questions on the Philippines. There's one question from Business Mirror. Is AMRO seeing signs that domestic demand in the Philippines is losing momentum, or does consumption remain resilient going into 2026? We also got a similar question from Philippine News Agency. Any update? It wants to ask AMRO about the update on AMRO's growth outlook for the Philippines for 2025 and 2026 and the factors behind the projections.
Right. So for the Philippines, so basically the AMRO's estimate of the 2025 growth was 5.2%. It's a downward revision of 0.4 percentage point from the October estimate or projection. And for 2026, we have 5.3%. It's a downward revision from 5.5% earlier back in October. The reason for this downward revision was fairly weak third quarter, Q3 of 2025 outturn. So basically, the picture for the Philippines economy is that it has been quite steady, but there are some headwinds against on the investment side. Private consumption has been quite firm, and we continue to believe that private consumption will remain firm. On the investment side, I think there are more headwinds. For example, private investment was of course need to be supported by investor confidence, and public investment had been affected by some of the for example, flood control controversies. But the important point more broadly is that when we think about the Philippines economy, it has been growing steadily, but the trend has not gone back to pre-pandemic trend, which was much faster than now. And in order to maintain resilience and even aim higher to going back to earlier trajectory of growth, we think that the public or policies should really focus on strengthen resilience, particularly in light of the two main risks facing the Philippines in the longer term. One, of course, is climate-related risks. Some of the flood or natural disasters that happened showed that the Philippines economy is vulnerable to climate-related risks. So to strengthen infrastructure to make the economy more resilient against natural disasters is an important consideration. Another, of course, is AI. We have been talking about AI boom, and the Philippines economy is has very strong performance in business processes management related service exports. But of course, in the AI age, I think the challenge is to upgrade those capacities and reduce the fragility or the risks of being some of those services being replaced by automation, AI-related automation. So again, that calls for more investment in upgrading human capacity, human capital, to be more skilled and upgrading to be suitable for the AI age. So all this require strong public investment or public-private partnerships, and that requires very strong policy frameworks, prioritize spending plans, and have targeted projects that would strengthen the economy's capacity, and that would underpin higher both higher public and private investments. So with that, let me stop here.
Thank you. Let me turn to Vietnam. We got a question from Vietnam Television in Singapore. Asked at the Communist Party Congress yesterday, Vietnam's top leader Thong Nam pledged annual economic growth of more than 10% for the remainder of the decade, despite global disruptions. How do you comment about this?
Alan?
So Vietnam is not just one of the fastest growing economies in the region, but also the world. And we expect the economy to continue to grow at a relatively high pace next year at 7.6, which we have upgraded from 6.4. So, and it's beyond just the near term. Vietnam has also seen very positive structural change in the last decade, and we have also seen quite meaningful industrial capacity upgrade for Vietnam. I think going forward, the expectation is such that Vietnam is likely going to be able to maintain a rapid pace of growth, especially vis-a-vis the rest of the economies in the region. But I think what is more important beyond the pace of growth is the quality of growth. So I think what is key is to ensure that high pace of growth is accompanied by a balanced and inclusive outcome, as well as to ensure that the growth is actually consistent with macroeconomic and financial stability considerations. Let me stop here. Thank you.
Thank you. We also got questions from Malaysian press, Xin Chiu Daily. The question is, AMRO mentioned the biggest possible short-term risk to the ASEAN+3 regional economy for the next 2 years will be a sharp fall in tech demand. What makes AMRO most worry about this? Is that any significant sign that the tech demand starts to show weakness? That's from Xin Chiu Daily.
Would you like to take it? Malaysia?
So the global
Tech demand.
Malaysia.
Well, in terms of, I think in terms of the nature of the concern on the sharp fall in technology demand, I think it has already been articulated by chief economists earlier. I think specific to perhaps Malaysia is actually the risk is actually broad-based. Also, some of the key things to look at is actually including things like whether there will be sharp adjustment in movement in asset prices relating to AI companies, and whether there is a sharp slowdown in CapEx spending in relation to AI. But I think what I would also like to highlight is that there is also a flip side to this narrative, in the sense that there is also a potential upside risk when it comes to greater diffusion of AI into the productivity of into the broader economy, including the US as well as the rest of the world. And this will actually pose an upside to growth for the region.
Thank you. Xinxiu has some more questions. Okay, AMRO has revised upward both 2025 and 2026 economic growth forecasts for Malaysia. Does that mean it is going to have a good performance for both years? What are the drivers that support a strong economic performance? What about the downside risks that we should pay attention to? That's for Malaysia.
For the case of Malaysia, we have revised our growth forecast upwards given the better than expected growth performance for Malaysia. We are looking at 4.4% this year, and we are estimating a 4.9% for the full year of last year. And this is really driven by the narrative. The driver of growth is really consistent when we talk about Malaysia, when we look at it from a broader region as well. We are looking at firm domestic demand, and we are also seeing the economy being supported by the external sector, especially in the E&E sector. We also seen encouraging indicators when it comes to investment, especially those that are related to emerging sectors such as data center and electronics. So I think the overall trend that we are seeing in the region is actually playing out in Malaysia quite clearly. So in that sense, that's the reason why we have actually revised our growth upward for this year. And in terms of key downside risks, again, it's the same. That's why we have flagged the technology demand shortfall being one of the key risks, because a lot of the growth has actually been supported by external demand in relation to the continued growth in technology export. But another point to highlight is actually the fact that Malaysia has actually been seeing quite encouraging investment development that could be that could actually lead to longer term revival of stronger potential growth. So I think the key area here is to ensure that the high investment that we are seeing now is being translated to more durable productivity enhancement, and how we can actually create higher value added activities across the economies, and also higher job creation in employment that the country needs.
Thank you, Alan. We got a follow-up question from Xinqiu again. Is that what is that will be impact to data center that booming in Malaysia if the tech demand slow down significantly? Let me read it one more time from Xinqiu. Is a follow-up question from Xinqiu Daily. What will be the impact to data center that is booming in Malaysia if the tech demand slows down significantly?
I think the impact would be, in a sense, if there is a tech slowdown in general, it would affect not just the data center investment activities, but also export activities, and not just in Malaysia, but also in the rest of the region involved in the supply chain that is related to the entire AI ecosystem, from chip productions to data center. In that sense, the risk to Malaysia is not unique when it comes to a tech slowdown. I think it will be a more broad-based risk for the region.
Okay, thank you. Well, we also got questions on the Philippines. Do you have any suggestions on what the government should focus on this year to help boost the domestic economy amidst the challenges both with the domestic and international front? There's a question from Philippine News Agency, and yeah.
So As I mentioned earlier, I think in terms of policies, of course, in the short term, if there are shocks that hit the economy, monetary policy and fiscal policy would be the first policy instruments that the government can use. There is still quite a bit of policy room in the Philippines. I think both the central bank and on the fiscal side, the government can support the economy. So that we have a lot of confidence that the government and the authorities do have the policy room to support. Now, going beyond the short term, in the longer term, as I mentioned earlier, what's important is really to strengthen governance, strengthen investor confidence, and prioritize investments or prioritize public spending, so the economy will become more resilient against, for example, natural disasters, climate-related risks, and become more, can upgrade the capacities to be able to still compete effectively in the AI age. So I think these longer-term issues would require concerted effort to strengthen the investment environment. So as I mentioned, public and private investment need to be stronger for the infrastructure to become more resilient, and for human capacity, skills to be upgraded. All this require a stronger investment side. Private consumption has been quite steady. So I think the message is really clear. In the short term, we believe the authorities have policy room to support the economy, but the challenges are really are important from a longer term point of view to strengthen the resilience of the economy. Thank you.
Thank you, Dr. He. I think we are getting close to the end of the briefing. So we take the last question for today. And it is again from Xin Xiu. Based on the ARIO report, AMRO mentions the balance of risk has improved, while the external environment remains highly uncertain. If we take Malaysia as an example, what kind of policies should the government employ to manage near-term uncertainties?
I think in specific to Malaysia, I think the general policy recommendation that we have highlighted actually applies as well. For the case of Malaysia, what we are looking at is actually for the economy performing relatively well at the current juncture. Growth is higher than anticipated. Inflation is low and stable. I think in this environment, what is key is policy readiness to make sure that in case downside risk in the environment of highly elevated uncertainty, there is possible downside shocks that could happen anytime. So in this situation, having that policy readiness and the policy space to actually support the economy from both the monetary policy perspective as well as targeted fiscal support, that would be key. I think at the same time, given the current situation and the tailwind that the country is getting from the investment environment, I think it's critical to maximize the spillover that the broader economy can get from this trend. So those would be my summary policy recommendation for Malaysia.
Okay, thank you very much. I think we have to conclude today's press briefing here. For more details of today's report, you may make use of the QR code on this screen to download the latest ARIO update. And on the flagship ARIO report with thematic chapters, we'll be launching it in April 2026. So we hope to see you again then. So thank you once again for joining us today. Thank you. Thank you, Dr. He and Ellen.